But let's move on. We have Ritu Arora, CIO of Canada HSBC OBC Life Insurance, now joining us. Ritu, hi. Good morning. All through the time when FIs were selling, we had DIIs supporting the market. Now we have seen the reverse of that. FIs are buying big, but DIIs are using the higher levels to sort of create cash levels or sell. What do you think explains that, and what's your own position right now as far as the market is concerned?
Thanks for having me on the show. March is definitely a period when DIIs, especially insurance, are flush with funds, and I think most insurance companies are building positions in the market. There might be some profit taking here and there. By and large, I think there is. Also in mutual funds, you do see a trend that when market is in correction mode for a while, and when you see a relief, you see some outflow of funds, which fortunately is not significant. And I think DIIs will continue to support the market in a big way, and it's a huge relief to see FIIs back in the market. I think the two key things market was looking for was FII to be back there and corporate earnings to show an improvement. So one has happened, so it's good news.
Okay. Ritu, hi, good to see you in today. But why do you think FIIs are back in the market in the month of Jan? Because it coincides with a big emerging market rally that we've seen globally, plus the Fed being more dovish in terms of what they had to say, along with the fact that we've passed the hurdle of the budget. So what's primarily the reason for the turnaround in the FII flows?
It is definitely global. It's a global risk on, and it's not just only India has seen flows from FII. The emerging market pack, as you rightly pointed out, has seen. The fact that the US Fed is continuing to pause again for a while shows that they are worried about the growth around the globe as well. China has seen a huge amount of volatility, and many investors are worried about China. But Europe, on the other hand, will continue to pump in a lot of liquidity, so will Japan. So the liquidity remains, the risk on is back, and then definitely India comes out as a relatively better positioned economy. Our fundamentals on economic front have been improving and only getting strong. Currency has been very steady, be it inflation, all other parameters, and growth also relative to other peers in the region looks sturdy. What definitely will give the momentum to the market is when this growth starts reflecting in corporate growth, in corporate results, in earnings. And I think from there, there'll be no looking back for the market. But this is definitely a beginning of the positive momentum.
Okay, a lot of stocks showing momentum now. Look at TVS Motor. Now it's almost at a new life high. It's at a new 52-week high, but its life high was in January 2015, somewhere around 325, 330, and almost approaching that level again. So TVS Motor has looked good. Of course, we've seen Ashok Leyland for all through 2014 and some part of 2015. The stocks that rallied were TVS Motor, Ashok Leyland, Eicher Motors, and some of these stocks clearly back in limelight. Ritu, in fact, that's my next question. What's the portfolio stance right now? What would be your top priorities right now, where you think one can invest even now and make a lot of money?
Clearly, in the rally of 10% that we've seen in March, not everything has participated. We've seen sectors like metal outperform, which were obviously at a very depressed valuations that we saw. My portfolio stance for next 6 months to a year will remain a bottom-up stock selection, because not everything will improve, and within sectors, not every company will show a positive traction. And hence, bottom-up stock selection, preferably with higher weights and high conviction where there's earning visibility, is what I would recommend. Sectoral allocation will make sense a little later as the growth kind of settles down and we see a general improvement across sectors. But till such times, it is absolutely continues to be an eye on earnings visibility.
Okay. Ritu, just a quick question with regards to a couple of these cap good counters, say something like a BHEL, where there's a positive report which is coming from a brokerage with regards to the beginning of a new power capex cycle in FY16, and that bidding was very strong for BHEL. There could be an order uptake of around 40% in FY16. Your sense in terms of whether you would be a buyer into the likes of BHEL, even something like a Larsen and Toubro?
I'm definitely a selective buyer in all the revival sectors and stocks, be it cap goods, be it infra. it is important to take a specific view and have these. They may test patience for next couple of months and quarters, but clearly these are the sectors that are going to outperform in the next 2 to 3 years. And I do like to add weight there. They are still available at very attractive valuations at this point in time, and we are seeing traction in sectors like roads. Cement is doing very well because we are seeing demand uptake as well as coupled with price increases as well. So we have started seeing the activity come back, and hence it's a very good time to add these sectors and stocks selectively.
Okay, pharma has not had a good time, especially the large cap pharma, Ritu. Any bargains which is available now, right now, and would you be bullish on pharma?
When you have a sharp rally like we did in last couple of weeks, it is understandable that pharma will not lead that. We've only seen the beaten down sectors, be PSU banks, metal, etc., really perform very well. But from earnings visibility point of view, having pharma in the portfolio makes absolute sense. Of course, there's an overhang of FDA, and one will need to be watchful and pick up companies where there are cleaner audit records. Otherwise, we will have event-specific corrections and worries emanating in this sector. But having said that, the entire focus that FDA has augurs well for the industry, I feel, and it will help our pharma companies have more reasonable business growth going forward in the developed markets. So I personally have liked pharma also because of the earnings visibility there, and I continue to add weight in pharma sector whenever the opportunity is presenting in terms of corrections.
Okay, fair enough, Ritu. We're going to leave it on that note. Thanks very much for joining in and taking us through all your fundamental views on the markets. For the Nifty 7695 is where we're at. Time for a break now. But up next, we have an interesting discussion lined up. Tea stocks and focus on reports that tea prices have in fact risen. We'll be joined by Kamal Baheti, CFO of McLeod Russell, to talk more about the current scenario.